crazy beats. Okay, it seems like everything is okay right now. Good. Good morning, guys. I'm sorry, we had some technical difficulties with the mic, but it has been solved, which is good. I wish you all a very good morning. It is the 26th of August, 2021. I hope everybody already had an amazing trading week. For me, it has been a little bit slow. I have just been observing, taking some reversal trades, let's say it like that, from the trends that have been happening in the last weeks. But just watching, certainly with the Jackson Hole Symposium, which is going on with Mr. Powell, who is gonna give us an idea of what his ideas are about the markets. But let's just take a look at what we have, starting with the DXY, which is basically the index of the dollar. I told you guys that we had last week. I told you guys that we had some aiming points here at the market where the dollar could rally towards before we could see some reversals happening, which has happened and which was great. So these blue lines you see here, that was the previous gap on the daily that you could see where price was not registered. And as you can see, and I told the students that we have, whenever we get back into that zone, we have to be mindful that price might start rallying back towards the upside and start rallying for this structural high here on the left side, which basically happened. We rallied that point. Maybe this is better. So we rallied towards that point, and from that point we started retracing. So whenever we saw that price was starting to show some resistance, which is here with that very nice doji, and then price action started to move towards the downside, and from this point we basically created a bearish order block, which is a full bull engulfing candle with this doji here, and then a full bearish engulfing candle that follows it. So this structure here of these three candles right now has become an order block where the market will pay attention to, okay, towards. Basically, with an order block like that, we will have to take a look at the wick of the last up candle, which is here. And as there is no wick, it is the body that is going to be sensitive for downside. So if we go towards a 1 hour time frame, what we can see is that the market is respecting that level here and started to move lower. So from this point we have a decision to make, and that decision is going to be based on what Mr. Powell is going to say. Okay, is this economy sustainable? Are we going to start tapering sooner? Which basically means that we are going to slow down the support that we give towards the markets, and we are going to slow down our asset purchasing. We are going to slow down our treasury purchasing and printing money. Are we going to do that, yes or no? And that is going to give quite, how would we say, an influence to what this is going to do. So let's take a look at US 30, which is the index of the 30 biggest companies here of America. The Dow Jones. Okay, this is from last week. It happened. So basically, we had quite an important level. It was like this, where we said, okay, if the market comes to this point and we see the market slowing down and showing some stability, then we can start a rally back towards the upside. So with the Jackson Hole Symposium, it is quite good that we are back at the highs. So from this particular setup here, what I expect is basically another rally towards the downside. Okay, that's what I expect. Some of the investors, of the big investors that I have read up on, they believe that the market can go higher. For me, it wouldn't be the worst that we can just make another drop towards the downside, and this is more technical than a fundamental perspective, but basically what we can see is that we have this massive buildup of liquidity. So we have point number 1, point number 2, point number 3, 4, 5, 6, 7, 8, 9, 10, and if you go to a higher time frame, okay, here we go, then we can basically see a buildup of liquidity, and whenever we shot above that, the low that was created before that happened was this one here. So this was the structural low here. Okay, so I'm gonna delete this so it becomes clear to you. This was the last structural low. higher low before we went higher. From this point, we basically ran that towards the downside, so we broke that structure, and right now we are back up. If we take a look at where this down move started, it came from this candle here, okay? And from this candle we can just measure out the body, which is here. So from this point the market is gonna have some trouble here, from this zone. And what I expect is, as we have broken structure here and we have had a liquidity, we can say that this here was the bullish intention that was shown. Okay, here they gave us a hint, and that hint could potentially be that the market right now can make a lower low. So for US30, whenever we keep rejecting this zone here, I actually believe that the market could make another down, which is about an equal size from here, and which would bring us back just to the lows or start consolidating. Okay, it doesn't necessarily need to make higher highs and higher lows every single day, every single week. It's also possible that we just see consolidation, just the same like that happened here. So if we just take a look right now at a smaller structure, then I want to show you something. So if we take a look here, this was a accumulation or a consolidation. Market shot above, and as you guys can see, we created here a liquidity pool. So we created highs, okay, we broke above, and then we broke that again, structural higher low. The market came back up, okay, towards the last candle that was formed, which is the doji here. From that point we started rejecting, and the market made a move towards the downside. How far did it go? If we measure out from the top of the range to the bottom of the range, and we just place that same distance towards the downside, it should be fairly equal. And what can we see from that point? If we just measure out here, the market completed that structure and then went higher. So as we have had that once, we can say here that we can see just that same structure happening again. So we can see the accumulation here, we can see the accumulation here, we can see the bullish intent, we can see the bullish intent, we can see the break of structure, we can see the break of structure. We come back towards the highs. If you want, you can place a Fibonacci on that, just to say, okay, how far did we actually go? This was about 80% retracement from the previous move. So if we do this here, this is gonna be about equal 80% of the previous move. So if we believe that the market can rally down, I'm not gonna say that we are gonna rally all the way down, but what I will say is that there is a potential that we do this and just back towards the downside. Okay, if we would place here just minus 0.27, okay, minus 0.27 retracement of the fib, then you can measure this out in numbers. I always make it a little bit more safe for myself because I believe in equally weighted distances, which is wave number 1, and we just make the same one. So you can target here the minus 0.27, but I would play it just a little bit more safe, and I would go here till the 34,400 level, which is an equally weighted move. Okay, so that's what I would aim for. Now if this move is gonna happen, then we can take some correlated trades. So for US30, how would it look like? It would look like a short position from this point. If your account is unable to take this with risk management, then unfortunately you cannot take the trade, but I would place my stops above the high. Okay, risking 1% or 0.5%, and then we can take it back towards this level. Okay, which is a 1-to-4 risk to reward ratio, which is great. Okay, 1-to-5 is ideal, but 1-to-4 is already a great trade. So this is how it would look like for US30. Here we go. Perfect, and that would be a good intraday trade, or just a weekly trade where we can see this move happening. Probably some accumulation. If we shoot above, really you don't want to be in because we are still uptrending. So basically taking a trade towards the downside is more risky in this environment than looking for a buy. But should we get there towards this level, then I expect, as this has provided us with an equally weighted move, okay, and then a new high, then basically if here we make that same thing, I also expect a high. So from that point, and this is not sure, we will have to see how price is going to react at that level, but from that point basically we could start looking, depending on how structure is moving, okay, for a buy back towards the upside. So that would be a good trade ID. But again, this is not sure. So first I'm going to just focus on what has happened before, which is that accumulation. We can see the buy side in 10, we can see the break of structure, 80% retracement, equally weighted move towards the downside. So again here, just accumulation. We can see the buy side in 10, we can see the break of structure, 80% retracement within that, and then just expecting another equally weighted move towards the downside. Okay, so right now we are at 35,388, so we are aiming at about 1,000 pips or 900 pips towards the downside on US 30. Now, correlated with that, as you guys know, should the Dow Jones drop, that basically means that we would be in a risk off flow, and this can be intraday. Okay, it doesn't have to mean that people are gonna stop investing. It can mean that people take some money off the table, they cash in some stocks. It can mean that some sell orders are being placed on plus, which the volumes are higher than the buyers, and then we can just go down, or just algorithmic wise that we can go back to those volume levels. So if the risk off flow on an intraday perspective happens, that basically means that the stocks will make a downwards move, and correlated with that we can see some things happening in the markets. And this is what we should see. So with a risk of flow, the probability is that the DXY will get stronger. So that means XXX USD sell is what I would favor in this environment, in the risk off environment. Okay, XXX USD sell is what I would be looking for. Also, I would look for XXX JPY sells. So XXX JPY sells, and that's for the very simple reason that the yen is a safe haven, and in risk off environments the safe havens will get stronger. So for me this is important. Why? I'm not really gonna take a bet on the dollar right now, okay, because we have been making higher highs and higher lows. So I'm not gonna do that. What I am gonna do is gonna start taking a look at the JPY. So I'm gonna take a look at the yen. If we would take a look at Euro JPY by example, if we believe that the stocks can drop, this was by the way the previous structure here that I showed you guys last week. So from this high we can see that right now we have come to an important point, which is the hard line from the bigger range. Okay, and this is really long term. This is long term. But we have come towards the hard line now that we first respected. Okay, we broke. Right now we are back at it and we are testing it. So if that move on US 30 would happen, the same possibility is going to count for Euro JPY on an intraday perspective. If we take a look at our last impulse towards the downside here, so from this point towards the low over here, we can see that we have arrived at the candle that made it happen, which is the doji, okay, and we are basically within supply. So this is a supply level. Euro JPY, GBP JPY. If the yen would get stronger, this would give us the same movement. So just for the sake of the analysis on US 30, I would do here exactly the same. On a technical perspective, you could look at it like this. So basically we have here a trend line towards the downside. We are about to have our third touch, and we have come to a point of support that we broke, which basically right now has become resistance. Okay, if we pull this a little bit further, you can see that it is quite a good point. So this is quite a significant level for the yen, which is 129.54. Okay, so combined with this, we can say that this is actually a good technical setup. So from this point, Euro JPY, we can expect a possible move towards the downside again, and that would be in correlation with US 30. Okay, so if the Dow Jones can make that impulse towards the downside, then just based on the correlation behavior, that means the yen would get stronger and the dollar would get stronger, which means the euro would get weaker and the pound could get weaker. Then we could have a setup which looks like this. So we can have a short position. Ideally, we close this a bearish candle. Okay, but right now, just theoretically, because this is still uptrending, we don't have confirmation yet that this is gonna stop. So ideally we would need to see maybe on the 4-hour or on the daily a sign that price is slowing down. But I would take it here above the high. I don't would really think there is a reason to go above it, because if we do, we break the trend line, and then you don't want to be in if the market moves higher. Okay, we will have to adjust our bias if we do that, and we will have to go to a bullish scenario. But for now, this is a very nice one. With the euro still fundamentally being bearish, I'm gonna make this a little bit bigger. So with the euro still being fundamentally bearish, I would choose the euro over the pound. Okay, but in this particular case with euro and pound, so this is what I would aim for, by the way. So I'm just gonna place a fib on that, and then you can just take it to the minus 0.27, which would account for a 1 to 6.9 risk to reward. Okay, this one has not been confirmed yet because we don't have the candle close yet. This is still a full bullish engulfing candle, so the idea is that the market could rally higher. What I would love to see is that the market runs it and then starts moving towards the downside, and then this can become an actual setup. Okay, this is just a theoretical one. The same with US 30, but US 30 is showing those signs already. Here we go. So for Euro JPY, this is a setup that I have in my mind if I can see the price action happening, and then we can see GJ. Here we go. Good. And as you guys can see, GJ is pushing. Okay, GJ is pushing, certainly above the structural point, but we are still within our supply zone, or within the candle here. So we had here a doji, and from the doji we saw a big drop happening. Okay, so basically within this zone I am looking for the market to show us some restraint towards the downside. And also the cool thing, or the thing that I use a lot, is that if we have a pattern, an M pattern like this, and the market comes back towards the neckline of it here, okay, then we can just see a retracement happening. So just because the fact that the euro is fundamentally bearish, I would choose the euro over the pound. But as you guys can see, euro GBP has been pushing towards the upside. Euro GBP has been pushing towards the upside, so basically that means that the euro right now is stronger, but this is just a reversal or a retracement within a higher downtrend. Okay, we can see higher highs and higher lows happening, higher highs and higher lows again, and we still have here a nice double bottom that we could aim for Euro GBP, which is about 0.82 level. And as the pound is fundamentally bullish and the euro is fundamentally bearish, I don't see any reason that we couldn't get there. Okay, but just for the sake of the market, because we do have a lot of space. Okay, we have a lot of space here above where we can go and make a retracement just on a fib perspective. Okay, we haven't gone till the 23%. We have just made it towards the 38%. We haven't gone above, not above the 50, so not above equilibrium within that fib. So there is that possibility, but as long as we hold here this key line, this dotted line that you see here, so as long as we hold it, we went above a little bit, then we just melted towards the downside. So right now in this scenario again, we made it till the 0.62% retracement on the Fibonacci. So if again here we can see the market slow down and we can rally towards the downside, then Euro JPY will be the better option. Okay, and this is gonna count here for the Euro JPY as it's gonna count for the euro against the dollar. it's gonna be exactly the same because this is also a safe haven. So from this point, you can also place a Fibonacci, and we can just do some trend trading, again, from the high to the low. And I'm gonna explain to you why I'm using a Fib here. Well, if we take a look at this one, so from the high to the low, we can see that we targeted our minus 0.27, okay, with the down. We didn't make it till the 62% retracement. It depends whether you take it here from this high or from the last impulse, structural impulse towards the low. So this was the last impulse towards the low. We came to the 62, pushed down to the minus 0.27. So if we just copy that trade just the same as the Dow Jones, then again, here from this level, you can see this doji here with the big price action, so we are in a supply zone. So from that supply zone, Euro USD, Euro JPY could start making a move towards the downside, and then this would look like this. Again, a trade with a 1 to 3.4 risk to reward. Okay, and you could do exactly the same with the pound against the dollar, which is basically what I'm focusing on a little bit right now. Just I'm focusing on Euro JPY, just those safe haven currencies. That's basically what I'm looking at, and I'm looking at US30. So if US30 can make this drop, which would be rather significant, a 900 pip drop, a 1000 pip drop, then we can take a look at the pound, which could do exactly the same. Euro JPY, which could make another move towards the downside. If we could do that, okay, so here we go. Basically something like that. This, yes, okay. So something like this. We come back here, we make a move towards the downside. Okay, we can target the minus 0.27. Should we target the minus 0.27, where do we get? Well, we get here at the bottom of this uptrending trend line. Okay, so 1, 2, number 3 is coming in, and then we can just use that same scenario here. Should the market come here, then we have found here a resistance 1, 2, 3 that was broken. We can retest it, and then we can make a run for the high. Okay, as we are trending up, I wouldn't really want to go against that. So for a long-term trader, we know that the market is 80% trending and 20% reversal. So apologies for that. So should we move up, why not just complete a longer term trend? That's a possibility. Okay, and that we can do something like this. It's a lot is gonna depend on what Powell is gonna say, for sure. Okay, and this would break out of the downtrend that we have been having. Okay, this would break out of the downtrend, because for now this is still being followed here, which is number 1, number 2, number 3. We are retracing from that, so this is still downtrending within this perspective, but we have made a higher high and higher low from this, so that means that we are in a triangle. Okay, it always means if you see that lower lows, lower lows, lower lows, but you see higher highs, higher lows, higher highs, that you know you are in a big triangle. So the question is, are we going to complete this back towards the downside? If we are going to complete this back towards the downside, that means significant long-term strength for the yen, which would also mean significant long-term down pressure for US30. Okay, is this possible, yes or no? I don't know, but we will take it day by day. I know that stocks are super high right now compared to where the economy is at this particular point. A lot of people are saying that the market is overextended and need a correction. A correction could help us to get more downside for US30 and to get more upside for the JPY basket, but levels have been completed. Okay, this is a setup that I made months ago, and we basically completed that. The JPY basket has made it back towards the top of the range, and basically right now can start completing it back towards the downside, which would count for a wave number 1, 2, 3, 4, and then just a wave number 5. Why not? Okay, if the market is trending down, it's trending down. So we will see what's going to happen, but right now from this point we have hit a critical level here. And ideally from this level here, from the fib line here, okay, which is also just a break retest scenario, we can see an impulse towards the high. Okay, and from that level we can decide, but the impulse towards the high is just here. We follow the trend, higher high, higher low, higher high, higher low, higher high, higher low, just a higher high. That's what we are aiming for. And if we go up and we start rejecting, then we know, okay, let's take a look. Is the Dow Jones moving further? Yes or no? How is the sentiment? Are people feeling like investing, or or has it become risky? Okay, what are the bonds doing? Because the bonds are a very good indicator of how investors are feeling. Okay, how are the bonds doing on 1 year, on the 3 year, on the 3 month, on the 5 year, on the 10 year? 10 year is what I'm looking at the most. It's giving a lot of information also about the real yields, and then from that point we can decide. But from now we just take it on an intraday perspective, which is GJ with a potential down, okay, which is Euro JPY as I have explained, with a potential down. Wait for price action. Okay, that's gonna be important because this is 1, 2, 3, 4 bullish candles right now that have been consecutive. So no reason to believe that not a fifth one can occur. But should we see price slowing down, so on a lower time frame here, okay, should we see price slowing down, which is basically you see a bearish closing candle. So from this level you see it get run, okay, and then you see a bearish close after it. That's important, a bearish close after it. Then we can put this in. Okay, this is a theoretical one. This is not an active trade, okay, but then we can put it in. This is what would make sense. Then if US30 can drop, then everything would be aligned, which would do great. Okay, good. US30 900 pips towards the downside, Euro JPY drop, GJ drop, Euro USD another drop. Good, perfect. So from this, again, if you just take the fib level from the high towards the low, I'm gonna erase all of that here. And just very simple, if you take a fib from the high to the low, here we go, then we are gonna target two things. The first one is the equal low here. That would be your first target towards the downside, and this would be the second one. Okay, in this particular trade, I would take my stop loss above the previous high. So here, within the supply zone, I would take my stop loss above the previous high, which is this one here, because this is the supply candle. If we run above, for me, it has become invalid, and I would just take it back towards the downside. So that would mean something like this, above the previous high. This is where my stop loss would be. Rather swing trade, 35 pips, something like that. And then we take it down for a drop, 1 to 6. Possibility is 1 to 9. Why not? We have completed the structure of the M pattern towards the neckline, and then we can start taking it further down. And that would just mean that we would break towards this liquidity here, which is just a double bottom, and a double bottom likes to become a target. Oh, I'm sorry. Here we go. Bam. So this has become a target right now. This is where some money is being built up. Okay, and we can aim for that. Good. So the conclusion for today, guys, this is just what I'm seeing in the markets, is that we have the possibility for GJ to drop. We have some nice opportunities. Certainly if US30 can make it towards the downside, I will be looking at that. Same with the dollar, so I'm looking at the yen and the dollar to get stronger if the US30 is gonna make that move of 900 pips towards the downside. You guys have seen the setups. You can just rewind, take a look at how it looks. Euro JPY is looking very beautifully, but we will have to see how Euro GBP is gonna act. And then again, the one thing is probably gonna follow the other one. So the yen is gonna get stronger if the US30 is gonna drop. Or the dollar is going to get stronger. We will have to just observe and see which one is reacting the most, and then that's the one that we can go with. Okay, so Euro USD, GBP USD, I didn't go over, not really interested in that one, so I'm just going to keep it with Euro USD, GBP JPY, and US30 for today. Okay, I hope you guys had value. Thank you very much for being here. If you guys have any questions, please don't hesitate to drop them under the video, but this is basically what I see. Know, guys, that trading is always risky, so you have to trade with risk management. That's basically the most important thing. Every monkey can press buy and sell, but if you have a very strategic way of how you approach the market with a good risk to reward ratio, you can increase your odds to win drastically. Okay, and that comes with discipline it comes with risk management. So using those 1 to 5 risk to rewards, let your winners run. So that means if you lose a few trades but you get those few winning ones, then your profit will still be there, even though you probably have lost more trades than you have won. Okay, and then after that, if the skill set is increasing and you can just up your success ratio with a few percentages, that can have a drastic impact on your equity that you are trading with as you become better. Okay, but discipline is super important. Don't trade with money that you cannot afford. Okay, it is still risk capital, so it's never a sure thing. Nobody knows where the market is going to go. The only thing you know for sure in the market is what you are risking. Okay, that's the only thing you know 100% for sure. What am I risking within this one trade, and do I feel okay with risking that? Good, guys. So 26th of August 2021, this was the pre-London overview, with some risk off, risk on flows, just the yen, US dollar safe haven. I'm not going to go too deep into that or why that is, but just the idea that if this is a systematic thing that happens, then we can just anticipate on that. We have seen a very nice schematic on US 30 that has repeated itself, so right now we can just anticipate on that repetition, and if we take a loss, we know that the risk is calculated in and we are okay with that. But should it happen, then we have an idea of what we want to do at least. Good. Thank you guys for being here. This was the pre-London session, 26th of August 2021 from Artis. Always trade safe. Okay, and I hope you guys have a wonderful trading week. Let's catch some pips, guys, and I'll see you next week. Ciao for now. Bye bye.